Well, good morning, traders. And calmer heads have prevailed in European and US trade. We've seen European equities under a little bit of pressure. But if you have a look at the EU stocks 50, you can see a really bullish hammer pattern coming through on the candle. So one suspects if we do see a higher high coming through in today's session, then you could see that showing and confirming a key reversal in that market. That being said, of course, if you do see some selling kicking in tonight, then obviously I would be jumping on board and trading that from the short side. You can see also on things like dollar yen, which traded down into the low 108s throughout yesterday's trading session. That's retraced a lot of those losses and actually closed firmly above Monday's high. So a bullish outside day reversal pattern there. Again, we're waiting for that higher high to confirm that the bulls are regaining back control there. And dollar Swiss, I think, looks quite interesting as well. So the Swiss and the yen really seeing a bit of retracement, people looking to buy into those safe havens. And the yen really is a bit of a bizarre one. 9 out of 10 times you would see the yen being the ultimate safe haven in G10. That's obviously that sort of called into question when one thinks about potential investor flows and the idea of repatriating capital back to Japan, when at the end of the day it's at the centre of what could be a conflict, and that is the centre of the missile test. So one suspects if the Japanese investors were going to push capital anywhere, it's probably going to go into the deep liquidity of the US Treasury market, or probably even the German Bund market. It's no surprise then we're seeing euro yen at the highest level since 2016. That looks really good from a trend and momentum perspective. But I'll be watching dollar Swiss. I think that looks quite interesting as well. If we do see a higher high, I'd be jumping on board of that, especially if there's a prospect of a good non-farm payrolls number on Friday. If we do see those average hourly earnings kick in, that would be one to watch going forward. But the upside seems fairly limited in the dollar. It's very hard to be long US dollars in this environment going forward with any real conviction, and we're not expecting a change in the longer term trend there as well. In terms of US equities, we have seen the market push up modestly higher. Tech seems to be looking quite good. Have a look at Apple, all-time highs kicking in there, and that stock looks really good, both from a trend and momentum perspective as well. So that's pushed up the FANG basket, and certainly tech's been looking quite attractive there. So that's one to focus on. And I think if you look at the S&P SPY futures as well, they sort of come along for the ride. They're trading up about 19 handles or so since 4 last night. So that's what we can expect. We can expect a stronger market open here in Australia. What's interesting, if you have a look at iron ore, spot iron ore, it was down 1%. Iron ore futures were down about 3%. Rebar futures down 1.3%, coking coal down very heavily as well. And you are seeing some big volatility kicking into those Dalian exchanges. But if you have a look at oil prices, well, they were a bit lower. BHP looks like it probably will open up slightly stronger if you look at the American depository receipt there. So you could see some positive flows back into the mining space, even though you haven't seen necessarily the underlying commodities looking that attractive, in the overnight session there. I will be having a look very closely at what happens in Fortescue. I think, given we are seeing greater volatility in iron ore futures, that stock could probably go the opposite way from BHP. That's one to watch. I think after the bell we did see the weekly API inventory numbers coming out. That showed just over 5 million barrel draw in oil inventories. I think people are giving this one a bit of a wide berth, because bear in mind that the inventory data did come or preceded the Hurricane Harvey, which of course is having a big influence on RBOB and gasoline futures. And obviously people are extrapolating what that can mean for oil demand going forward, which of course is lower. If you're seeing refinery shutdowns, they need less oil to work with there. So certainly oil prices under a little bit of pressure, but I'm waiting for a turning point in the oil market. I think we're going to see a move higher in the short term. Wait for the technicals to confirm that. But we are expecting a slightly stronger open today. Not a huge amount to drive. As I say, I'm watching the dollar, some of these dollar crosses, and whether or not we can actually see a bit of a move higher in the short term going into those payrolls numbers there.